Welcome to The Explainer. Look, if you've been checking on your retirement accounts lately, you've absolutely noticed the flood of marketing for gold IRAs. I mean, it is literally everywhere right now. But today, we're going to cut right through all that marketing noise. We're diving into the verified data to give you a totally honest, objective look at one of the companies you've probably seen heavily advertised, Legacy Precious Metals. And actually, more importantly, we are going to expose a massive industry blind spot that I call the gold IRA fee trap. By the end of this explainer, you're going to have the exact framework you need to actually protect your nest egg. So here's our roadmap for today. We'll be hitting 1. The gold market boom. 2. Legacy precious metals reviewed. 3. Red flags and complaints. 4. The gold IRA fee trap. 5. Top alternatives to consider. And 6. Next steps for retirees. Let's just dive right in.
The gold market boom.
To really understand why companies like Legacy Precious Metals are getting so much attention right now, check out this number. 55%. In 2025, gold posted its biggest annual gain since 1979. It climbed an astonishing 55% to blow right past $4,000 an ounce before the year ended. You guys, this isn't just a minor blip. This is a massive structural shift in how capital is moving globally, especially for retirees who are desperate to hedge against inflation and market volatility.
And there are three major factors driving this historic surge. First up, central banks. They are hoarding gold at a record pace. Their buying surged 50% in the third quarter of 2025 alone. Second, silver actually outpaced gold, shooting up 148% thanks to massive industrial deficits from the solar, EV, and AI data center markets. And finally, heavy hitters like JP Morgan are now projecting that gold could push toward $5,000 or even $6,000 an ounce by late 2026. So that's the backdrop here. Investors are actively, aggressively seeking assets that hold value outside the traditional credit system.
Section 2. Legacy Precious Metals Reviewed. With all that massive demand in mind, let's zoom in on a specific case study to see how companies are actually responding. We're looking at Legacy Precious Metals, a firm out of Frisco, Texas that pitches itself as a one-stop shop for physical gold and silver IRAs. Let's be completely objective here and weigh the pros against the cons. On the plus side, customer accounts consistently confirm that Legacy uses a no-hard-sell approach, which is a breath of fresh air. They focus heavily on education, and they offer a no-questions-asked buyback program, which is fantastic for liquidity. But the cons are pretty significant. They require a steep $25,000 minimum investment for an IRA. Also, their fee structure is currently totally hidden from their website, and most alarmingly, they carry an F rating on the Better Business Bureau.
Now, the reason behind that fee opacity is highly specific. As of early 2026, Legacy Precious Metals is actually in the middle of transitioning to a new IRA custodian. Because of this, their specific setup fees, storage costs, and annual maintenance bills just can't be verified up front without literally getting on the phone and demanding a custom quote. And you know as well as I do, for a focused investor, uncertainty is the absolute enemy of a secure retirement plan.
Section 3. Red flags and complaints.
That lack of transparency brings us to a really stark contrast in customer reviews for Legacy. When you look at the feedback, it's honestly like looking at a tale of two entirely different companies. On Trustpilot, they boast a stellar 4.8-star rating. Tons of clients are praising their reps for smooth IRA rollovers and helpful service. But then you click over to the Better Business Bureau, an F rating. This is driven by unresolved complaints, including a highly concerning report where a customer wired $7,000 for gold coins and reported not receiving them after 5 months, with calls just going completely unanswered. While a lot of transactions clearly go smoothly, unresolved high-dollar disputes like that warrant serious caution. Quick aside here, if you want to skip this kind of guesswork entirely, especially if you're an American retiree with over $100,000 in your IRA, grab the free, fully vetted Gold IRA educational guide linked in the description below to start your research safely.
So, that naturally brings up the big question. Are there safer ways to explore gold IRAs without taking on the risk of an F-rated company or dealing with unverified fees? Absolutely, yes. But to do that safely, we have to look past the shiny marketing brochures and understand exactly how these retirement accounts are built behind the scenes.
Section 4. The Gold IRA Fee Trap.
This brings us to what I consider the single most important lesson of this entire explainer. We're pivoting to an industry-wide issue that every single retiree needs to understand before they sign anything. I call it the Gold IRA Fee Trap. Take a look at this. This is the verified 10-year core cost model compiled from 2026 data. We're stripping away all the promotional fluff and just looking at the cold, hard math of setup fees, annual custodian fees, and storage fees over a decade. Look, a gold IRA rarely starts at zero. Even the most competitive, transparent companies out there, like Augusta Precious Metals and American Hartford Gold, have a 10-year core cost that floors around $2,000 to $2,500. Birch Gold's model can reach over $4,600. You absolutely must account for this base cost.
So the crucial concept you need to grasp here is something called percentage drag. Basically, this is the disproportionate financial penalty that a flat annual fee imposes on a small starting balance compared to a large rollover account. When a company advertises a super low minimum investment, it sounds like a blessing, right? Like they're being accessible. But financially, it can actually be a trap.
Let me show you exactly what I mean. Let's look at the percentage impact of a very standard $355 first-year fee. If you open a small starter account with just $5,000, that $355 fee eats a massive 7.1% hole in your wealth in year one. Your gold would have to appreciate by over 7% just for you to break even. It's wild. But if you roll over a $100,000 account, that exact same $355 fee is a mere 0.35% drag. It's barely a drop in the bucket. This is exactly why you have to evaluate fees as a percentage of your specific account balance.
Plus, you've got to plan for the long game here. IRS rules mandate that annual maintenance and segregated storage fees continue even when you hit retirement age and your required minimum distributions, or RMDs, kick in. A long holding period doesn't magically eliminate these recurring custodian bills. You're going to be paying these fees as long as you hold the physical metal in the account.
Section 5. Top alternatives to consider.
Armed with that knowledge about the 10-year fee reality and percentage drag, let's shift to some objective alternatives for investors who demand way more transparency and security than Legacy Precious Metals currently provides. Let's do a quick side-by-side comparison of the 2026 data. We know Legacy has a $25,000 minimum, an F rating, and unpublished fees. But look at Augusta Precious Metals. Yes, they have a higher barrier to entry at $50,000, but they boast a flawless A+ BBB rating and strictly published, transparent fees. If you have a slightly smaller portfolio, American Hartford Gold offers an A+ rating and published fees with only a $10,000 minimum. The data clearly shows that you do not have to settle for opaque pricing or poor consumer ratings when you're trying to protect your retirement. Section 6. Next steps for retirees. Okay, we've covered a tremendous amount of ground today, from the macro gold boom all the way down to the micro realities of 10-year fee models. Now let's move into our actionable conclusion so you can take this info and safely protect your portfolio. Here are the exact 3 steps every focused investor needs to take before signing any paperwork or funding a gold IRA account. Step 1. Demand a written 10-year fee schedule. Not just year 1, get the full decade. Step 2. Calculate the percentage drag on your specific account balance to make sure those flat fees won't just eat your returns alive. And Step 3. Consult a qualified financial advisor regarding exactly how holding physical metals will impact your required minimum distributions down the line.
You have worked your entire life to build your nest egg, so please do not fall for opaque pricing or aggressive marketing tactics. Use the free, vetted educational resources that are out there to empower yourself. In fact, if you are an American retiree sitting on $100,000 or more in an IRA, a 401k, or other retirement accounts, listen up, this is for you. You need to secure your free Gold IRA guide today. We've placed a link right down in the description to a premium, top-rated guide that will walk you through the exact steps to roll over your funds without penalties and completely tax-free. Honestly, it's the absolute best way to objectively evaluate your options and see if a Gold IRA is actually the right fit for your specific portfolio.
So, I'm going to leave you with this final, provocative thought to chew on. When you're looking at all those shiny brochures and flashy celebrity endorsements, ask yourself, are you judging your retirement investments by the headline marketing or the cold, hard 10-year fee reality? Always do the math, stay focused, and keep learning. Thank you so much for joining me on this explainer, and I'll see you next time.